Okay, very good morning here on the 15th of February 2019. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference, Traders Open Day. And a very warm welcome into this weekly market roundup, the weekly review that we always do here on Master of the Markets on a Friday. Regardless of whether we've had a profitable or a losing week, we report in on these updates, and this is very much as it is for yourselves as it is for us as well, because it's a great way of us doing a review and becoming accountable to our community in terms of how we're executing our trades and how good we are at actually following the trading strategies that we've actually built. So this week there has been an element of inconsistent execution, so we have missed a couple of trade opportunities, mainly due to analysis which wasn't clarified completely in the crib sheet. So this week I'm taking some action points to clarify the crib sheet so that we can become very, very clear. Even though the rule set was there in terms of taking the trade, it wasn't clear to us how that was to be done, and so as a result that some missed trades, some trades going out later than we would have liked. So we're going to tidy that up, and I'll do that over the weekend. So we'll make sure that by the time we get to Monday, we have a set of crib sheets that we are looking at, which we have total clarity over. And of course, this is an ongoing process, so we continue to improve and refine the level of clarity that we have here in the market in order not to miss opportunities. But of course, we want to keep things as tight as possible. Let's do a little review as to where we are. Let's start with the live trading room. I always like to start with the live trading room in terms of what we've gotten to this week. So this week only really one trade on the live trading room, which is the money bars GBP USD. You can see here on cash I was slipped a little on my entry, so I made a loss here on an initial stop. This actually went down and hit our initial stop, so this money bars trade did not turn. So this year so far, 4 money bars trades, only 1 winner, 3 losers. Not really ideal. It's not really reflecting what we saw last year, but in essence, this is a very robust trading strategy with a lot of rules set inside it for longevity. So I'm not really worried about 4 trades. I'm looking at it for more of a period of 3 to 6 months in terms of what the yield will be. This is well within the maximum drawdown parameters as well, what we're seeing here. So there's no real cause for concern at this time on this. What I would say is that the cash trade, as I say, did slip me a little bit, so it was a minus 1.05 on that one. On the system, you can see the same trade yielded a minus 1% just there. So a slight discrepancy between cash and system, not much we can do on that one. And that went to hit its initial stop. Let me just give you a little review on what we were looking for on this money bars trade. So in essence, this is the PSWB that we were observing just here. We believed that this was going to become a turning point in the market, entered on the close. A stop, of course, on the low of this bar. When we did the open equity studies, the market does stack up in our favor. So it is really a little unlucky that we got to that point. However, that's the nature of trading. We were expecting an upside move. You can see that we had a primary, then the market moved against us, stopped us out on our initial stop. We didn't get a chance to trail, and hence we are out of that one. So let's do a review then. That's the only trade this week in the live trading room. One of the 2 other things I want to show you in the live trading room in terms of a review for the week is the beta strategies. There have been a couple of beta setups, but they haven't yielded much of a profit or a loss. This is certainly one of them. So the Euro Japanese Yen is certainly one of them that we saw on the system. We didn't take on cash, but we did see on the system. Euro Japanese Yen, it opened on the 6th of February. Let me just show that to you here. So we opened that trade on the 6th of February. On the close of this bar just here, on the close of this confirmation bar, we would have sold short. Stop above the high of this bar. You can see trade did progress in our favor, but then turned pretty quickly. We were stopped out on the high of this bar for a very small profit on system. 9 pips, I think it was. Let's just check. 8 pips, 0.17% profit. Not really ideal, but not really too much that we can do in terms of that. So slight missed opportunity there on the beta cash in 3.0 system. The beta gold bars system, again, I did actually spot the trade. So Aussie dollar we took in the live trading room. That only yielded a small profit of 0.05%. So again, very small profit on the Aussie dollar. This is the big winner of the week in the live trading room, really, which was the euro dollar, which we unfortunately did miss. Now, when I placed the trade, again, because of a lack of clarity in terms of some of the parameters, because it's a beta strategy, it's in testing, we haven't rolled out the final set of parameters for the strategy just yet. And even though I did call the trade before it was triggered, the levels that I published unfortunately were incorrect. I think I may have been a little tired. 133.18 is where I sent my entry, 133.44 and 132.60 or something like that is where I put my target, which was still 26 pips of risk, 58 pips of target, but obviously you can see very far off where we should have been. So that was of course quite unprofessional and not really ideal. But the reason that I'm telling you all of this is because this is really what happens on the ground. These are the real types of errors that do occur. And whether other traders will report on this or not, I'm not sure about, but we certainly want to, because I want to become more self-aware myself as a trader to get better. And of course, having accountability is one of the big things that you can do to do that. So that's the purpose of me telling you this. So even though we published the levels before the trade was triggered, I published the incorrect levels. As a result, I missed this trade. So did the community here at the live trading room, unfortunately, as well. We all missed that together, but it is a system trade, and it does prove one thing to us, which is the beta gold bar system has started to work already over just a 2-month period. So we will continue to observe that, and we will continue to place trades around that. Let's go over to the elite trading room and let's take a look at their results this week. Okay, so here I am on the Elite Trading Journal. Just before we do a review of this, I just want to go over to the euro dollar and the Aussie dollar gold bars trades on the live trading room. I just want to show you exactly what the plan of attack was. So we saw an interruption in the market, which was this one just here. We had a pending order to open. I believe it would have been roughly around at this point here. Our stop above the high of the bar. Our stop was probably, in fact, look, let's not guess. Why don't we just pull the exact levels from the journal? I don't like to guess. Everything here should be about precision, and it is. And hence we can report in this way. 11318 was the entry. 11318 was the entry, which is there. The stop was 11344. 11344 was the stop, so that was, yeah, just there, as I said, above the high of the bar. And our take profit was on the low of the bar just here. And you can see that, yes, during the next day the market did open, it triggered our order, and then it did sink and it went towards our target just there. So that was the key. It did go for it, and it did hit the target just in one day as well. That was a 2.26% profit on that one, 2.23% profit. The Aussie dollar was similar. We placed a trade around this interruption just here, this one. So we did again, we opened around about this level just here. So it's quite late on into that particular opportunity, and we closed the market just on the close there. It was only a small profit. So those were the two trades on gold bars on the Aussie dollar. Over to the Elite Journal, where the big winners for the week, let me just reference my notes here. Big winners for the week have been and the only trades for the week as well, have been the gold bars trades. So 2 gold bars trades, yielding a massive 5.74% of upside. 5.74% of upside there on the system trades on that Aussie dollar and euro dollar. Massive congratulations to the Elite team on getting involved with these particular opportunities. You guys have really cleaned up this week, so that's really good. Remember, all strategies have their pros and cons as well. So gold bars does go through its drawdowns as well, and we find that really only 30 to 40% of these trades become profitable. But there are some of them in there that become quite large profits, and 4.16% in a single day opening and closing on the 13th of February is quite spectacular, really. If you look at the entry on the Euro US dollar, 11339 was the entry on that Euro US dollar trade. If I go over to the chart, you'll see actually 11339 is this price level just here, and the way we positioned our entry, we were just taken into the trade by 1.6 pips because the high is 46. So let's take a look. Let me show you here on the data window. Our entry 11339, so our entry is 39, and if you look at the high of this bar, the high of this bar has got to 40.6. So again, we were taken into this trade by just 1.6 pips, and from that point it didn't look back and it just sank. It hit our target at the bottom of that outsider bar inside of a single day. So as I say, spectacular is the only word I can think to use for that. That's a massive profit on that one just there. So that is on the Elite Room, those two trades for the week, of course, which wipe out any losses from the live trading room as well for us. So we do finish net positive for the week, and hence my update this week. Let's go over to the topic for the week. Okay, this week I want to talk about limit orders and how and where we use them. Okay, so limit orders have a couple of different functions. So first of all, what exactly is a limit order and how is it different from a stop order, and when do we use them? So a lot of you will know that if you click onto the MT4 box, then obviously under pending order you will get 4 different types of potential opportunity that we can reference here in the market. So of course you've got the buy limit, the sell limit, then you've got the buy stop and the sell stop. So 4 different types of orders and 4 very specific purposes, at least 4 very specific purposes that these limit orders can be used for. First of all, let's discuss the difference between a pending order stop and a pending order limit. So all of these are pending orders, remember, but let's discuss the specific difference between a stop and a limit, and let's use this chart as our reference point for what we can look for each particular trade opportunity. So first of all, this Euro US dollar, okay, let's understand what and how a limit order can work for this. I'm just going to go to the money bars profile just to get a nice clean chart up. We don't need the moving averages for this demonstration. So remember, this is very important to us because everything that we're doing here is a pure price action based strategy. Even what you saw on gold bars here on the euro dollar, pure price action, no indicators involved whatsoever. You may say that this is an indicator, the smart money indicator. To be honest, we only developed this for our community. We don't really need the smart money indicator because we've understood and memorized the formula for how it is developed. So we could just trade this chart using pure price, and that's how you're seeing the profits that we've taken this week as well have been derived. Now, if you look at the idea of a stop order, let's say, for example, I wanted to buy euro dollar on the high of this bar just here. This bar is representing a worse price than where the current market is. Okay, the current market is at 82. But this level is 118. See, you can see that just there. So the current market is 82. This level is 118. So if I bought something for £82 and if I bought something for £118, you'll agree with me that buying something, the same thing, for £118 is a worse price. Wherever we have a worse price in the market, we use stop orders. So the inverse also is true as well. When we need to buy at a better price, supposing I wanted to buy on the low of this bar just here. Okay, so supposing I wanted to buy on the low of this bar just here. The low of this bar is 50. Okay, so the low of this bar is 50. So if I were to buy at 50 instead of where the current market is, which is at 82, you'd agree with me that I'm buying at a better price than where the current market is. Okay, I'm buying at a better price than where the current market is. What does that basically mean? It basically means that I am now able to make a purchase at a better price, buy for 50 instead of buy for 82. And of course, both of these orders have their pros and cons. So the actual order here to buy at 50 is a much better price than buying at 82. So I can buy at a cheaper price. But remember, the disadvantage is if the market never gets to the stop order at 118, then I have less of a confirmation potentially that this is going to be a turning point in the market. So this is more risky a purchase here, to make a purchase here at a cheaper price, because the market may never give me the upside direction and confirmation that I need by the price breaking these previous highs and getting me involved. If the market doesn't do that, then of course that is a disadvantage, because I'm buying down here at a better price. The market just may continue to sink. So there is a disadvantage to this limit order as well. It's not just that you're buying purely at a better price. You are buying at a better price, but that comes with disadvantages. So depending on the objective of your trading strategy and the concept on which it's based, is it looking to be entered in a mid-move? Is it looking to be entered towards the start of the move? Because towards the start of the move, you need more confirmation. Okay, so for that, you may want to use a stop order. But towards the end of a move, you may want to use a limit order, because you may not necessarily want to be triggered. You need to go away and think about the different permutations and when this is all when this all has its own particular use. So for the perspective of some of the live trading room strategies, as a trading strategy level, they're very good quality high-end strategies, but of course the elite strategies we have are much more premium. They enter using limit orders. The live trading room strategies enter using stop orders. Again, the advantage of the live trading room strategies is that they will give more of a confirmation of a move. So for example, on the Euro Yen liftoff, which we've just placed on the low of this bar, this was a pending order that we'd placed on the low of this bar. And of course the advantage of that pending order was the idea that if the market breaks that low, it gives us a pattern which we call a primary high. And with that primary high pattern, we see a much higher probability of getting a confirmed swing in the market. Now, here is the disadvantage of course, this pending order. The pending order disadvantage is that I'm getting into the move much later, and so to get to break even will take me longer. Now that's the disadvantage. The advantage, of course, is a higher level of confirmation. So in this particular case, what was the order we placed on the liftoff last night? Of course, this was a sell stop. And why was it a sell stop? Remember the golden principle. The stop is in essence a worse price than where the current market is. Okay, the stop is a worse price than where the current market is. It's very important to understand. Given that is true, a limit order would then be used to enter at a better price. So if our community had missed this Euro Yen trade, what they can do is they can place a limit order where we placed the limit order, which was at 7.1, current price at 5.6. If I sell at 7.1 and the current price is at 5.6, this is a better price than where the current market is at, and hence they would need to place a limit order if they wanted to get involved with this particular trade at the correct trade level. Okay, so of course advantages and disadvantages of both. You can use limit orders to enter a better price in the market, but you'll have less confirmation. You could also use limit orders to enter trades when you have this key issue, which of course is that you miss a trade and you want to get in at the right price. You can use a sell limit order in this case. So that's it from me for this week's market roundup. We've done a complete review of the trades that we've taken. I know it's a longer roundup than we normally do, but really wanted to be thorough this week, so we make sure that we communicate everything that was happening. We look forward to speaking to you very soon. If you have any questions about the analysis that we're doing, anything at all, you can leave a comment in the YouTube video or on our blog. Be more than happy to answer that. Of course, if you're in the live trading room or in the Vedanta Elite room, you have the opportunity to ask questions every day, as the analysis is 5 days a week. Okay, so that's the idea just there. So look forward to speaking to you all soon. Until the next time, stay disciplined, follow your trading plan, and keep trading like a master.